A lot happened this week that will tell us about the future possibility of more rate cuts, what is going on in the manufacturing sector, consumer confidence, jobs, and unemployment. Let's take a look. Before we begin, remember to like this video and subscribe for more economic updates. This week, the Commerce Department had good news for those counting on more rate relief when it reported that the Personal Consumption Expenditures Price Index moved even closer to the Federal Reserve's inflation target last month. According to the data, headline PCE was up 0.1 of a percentage point on the month, which helped lower the annual rate to 2.2%, down 0.3 of a point from the pace in July, and the slowest rate of growth in 3.5 years. As for core PCE, which excludes food and energy prices, that was up 0.1 of a point in August and 2.7% on the year. The annual core rate was actually 0.1 of a point faster than in July. With the release of the latest inflation data, the markets are now pricing in a better than 50% chance the central bank will lower interest rates by another 0.5 point when policymakers meet again in November. Earlier in the week, S&P Global reported that its Flash Services Purchasing Managers Index dropped to a 2-month low in September, declining to 55.4 from August's reading of 55.7. Still, Services PMI has landed above 50 and in expansion territory for the last year and a half, underscoring the resilience of that sector amid the highest inflation and highest interest rates in decades. The news from the manufacturing sector was not as positive. As measured by S&P Global, PMI activity in the manufacturing sector is now at a 15-month low. The survey's Future Output Index fell to its lowest level since October 2022 and to its second lowest level since the global health crisis. In a statement about the data, Chris Williamson, chief business economist at S&P Global Market Intelligence, said, "There are some warning lights flashing, notably in terms of the dependence on the service sector for growth, as manufacturing remained in decline, and the worrying drop in business confidence." On Thursday, the Census Bureau reported that orders for durable goods were unchanged in August, and that was welcome news to economists who expected to see orders slip last month by 2.9% after surging 9.9% in July. There was also good news to be found in the core durable goods number, which strips out the volatile transportation sector. Core durable goods orders rose 0.5 a percentage point in August, beating analysts' expectations they would increase by just 0.2 of a point. As mentioned, both monthly headline and core durable goods figures came in better than expected in August. But analysts say the wild swings in recent months have obscured the overall weakness that continues to plague the manufacturing sector. For example, on a year-over-year basis, core durable goods orders were up just 0.3 of a percentage point in August. Finally this week, the Conference Board revealed that its widely followed Consumer Confidence Index tanked in September. On Tuesday, the board reported a decline in the index by nearly 7 points this month, down to 98.7 from the 105.6 posted in August. This month's figure also defied the projections of economists who expected to see the metric land at 104. The month-over-month decline in consumer confidence was the largest recorded by the index in 3 years. That's it for now. We'll see you again next week. This is Devlin Steele for Augusta Precious Metals, signing out.